The reversal signal we've been talking about is holding strong, and that's why we need to get into some technical analysis for the SPY, Qs, Apple, Tesla, Amazon, and NVIDIA. So let's talk about this signal. If you weren't here for it, that reversal signal is a divergence between the SPY and the Qs. The SPY and the Qs, when you do have a divergence between the two, meaning the SPY is actually heading to higher levels, while you see over here that the Qs are actually heading to lower levels, it's turned into a lot of reversals as long as it holds strong. So I just wanted to take this moment to repeat that if we do violate and come above this high, then this reversal signal would not be valid at that point, and we would have to be looking for other things. And I do see us getting a little bit bullish maybe before Wednesday this week. All right, let's just focus on the SPY now. We have updated those ranges for you. So you do have those weekly ranges, and this is just what the options market has priced in for the week ahead, and you have a 68% chance to land back within this zone. Okay, and the thing to notice about this is you're getting that weekly range very close to the monthly range. So if we do see some bullishness, this can be some very, very strong resistance, and that's the first thing I wanted to point out on the SPY. The next thing is if you actually do get continued bullishness, you actually could get this MACD down here to cross. And then if it is followed up by possibly a very big down day, either with the Fed or right after the Fed, then we can see a divergence form up here. A very small divergence could form. You actually have that divergence as of right now down on the RSI, not necessarily on the MACD. But if we do get to higher points, you can see how we would curl up and maybe create some kind of quick divergence before heading lower. And I'm going to get into why I think that we're going to see some downward pressure after the Fed talks when we get to yields. Okay, so when we get to yields, we'll talk about that and what is most likely going to happen with the Fed this week with that Fed rate decision. Okay, so we want to pay attention. But the reason that we're still getting upward moves in the SPY is because we are able to stay in that positive territory on the MACD. If you've been a part of this channel, we've really talked about how important this center line is and how we need to really get into that negative territory to start that negative trend. And if we keep curling up on the hourly into positive territory, we are going to see this continue, this upward movement continue, even though it is getting choppier at this point. So that just tells us that maybe some volatility is starting to creep back into this market. We need to be cautious, but as long as we are in that positive territory, we're going to see this thing keep consolidating and going up until we see a further breakdown to get us into a negative trend. Switching over to the Qs, we can see that that range is up towards that monthly expected move, but not necessarily all the way up there, not as close as the SPY. So we could see resistance step in a little bit sooner on the Qs if we do make some kind of upward move. We're getting those Bollinger Bands real tight at this point, and we do have CPI and the Fed rate decision this week. So we are going to see a big move in the very near future. And overall, our idea here was we are forming some kind of cup and getting that handle. And that still could be true with the Qs right now because you do have that divergence between the SPY. But I'm just stating that if we do get CPI, it's turned out to be a very good thing for the market the past few months. So we could see an upward move before we actually see that ripped away from the Fed, which is what we're going to talk about when we get to yields. But let's just switch over real quick and just look. You can see this inflation data here. We would need a surprise in order to get a bad reaction, and this has been a good piece of data for the past few months. So we really want to pay attention to it, to the bullish side, because if you really want people to sell off with this kind of data, you're going to need a definitely higher reading, right? You're going to need something like, 4.3, you're going to need 0.5. You're going to need a bigger reason for people to really believe inflation is coming back into this market. And this reading has been very good in the past few months. So I would not bank on this being a negative thing for the market as of right now. Back to the Qs, you can see we still have that downward move in the Qs while the SPY is moving up. So if we switch over to the hourly here, there is a slight problem. We might see that reversal signal taken out, okay? We are starting to creep up, right? We were talking about this being a possible handle. And the only problem here is we're not into negative territory. So we're really going to need this to flip back around. We dipped into it for a second. We saw the negativity come in, right? Get some lower lows. But at this point, we are up in that positive area. So if we do get some consolidation on Monday and then a good CPI reading, we actually could see this come up higher. And we'll talk about that on this channel if that reversal signal is kind of going away after the CPI reading. And the reason that I'm stating we could see some consolidation on Monday is because really the narrative is going to pretty much stay the same, right? I believe we get some bond auctions on Monday that could do some things, but really people most likely will sit on their hands until they actually get some data that can move the market, until they get that piece of data that tells them what direction the Fed has to go. And that's overall why I think Monday will be some kind of consolidation, maybe even a little bit more dramatic consolidation, right? With those big swings up and down, just because volatility volatility can come back into this market anytime because those Bollinger Bands are so tight, which we're going to look at in a moment. If we do break down early on Monday, just look for this gap fill. That's mainly what I would pay attention to. And at that point, you're pretty close to that weekly expected move. So if we do touch that weekly expected move early on Monday, we could get a big reaction from CPI because this is all that's priced in by the options market. And I just felt like that was important to say because if we do see dramatic selling, we can always pay attention to that bottom side of the weekly expected move, kind of like Apple this week. Apple touched the bottom of that weekly expected move right around here, right? It actually touched almost to the penny right here, and we see that big reaction the next day. So this is overall why we want to pay attention to those types of things, and we might as well get into Apple now. Apple is a big stock and it tends to lead the market, okay? So we really want to pay attention to it, and you can see right now we're actually getting some kind of divergence forming if we're able to curl back down on this MACD. So that's what I'm paying attention to. We're outside of that Bollinger Band. We did get a little bit tight, so we're seeing a little bit of a big move, and we could see this start to break down. Now, the weekly expected moves aren't up on here, but you can go get those down in the description for me on my Patreon. We give it for every single stock that we cover on this channel. The main thing I would point out on Apple is the fact that we are pretty far away from that 9-day moving average. So if we wanted to reconnect with that before heading higher, that would make some sense here, maybe with some kind of consolidation just like this so that we actually catch up, right? See this 9-day start to catch up, and then we can use that to kind of spring off of and head a little bit higher. So we really want to pay attention to the bullish side because that CPI data has been very nice to the market the past few times. Shorter time frames, the 30-minute on Apple, we're actually paying attention to it because there is this triple divergence and you are seeing some wedging at this point. So you do have a bearish wedge, meaning these usually do play out to the downside. Doesn't mean they can't play out to the upside, but it just gives you that probability that most likely we will see some kind of breakdown. Now, the expected move from this wedge is not very big, so this is why on Monday we actually could see some kind of consolidation and then get some good news with that CPI because the CPI has been friendly to us. So we want to pay attention to it, but you do have these divergences here, which might just tell you, hey, we need to break down to lower levels and find some more buyers somewhere before heading higher, maybe even come and fill this gap before we start to head higher Tuesday. Amazon also came into its weekly expected move. I believe it was right above it. It held strong and then started to consolidate even more. So right now, overall in the market, you just need to know we are heading sideways, which usually causes these Bollinger Bands to get tight. And that just tells us, hey, people are looking for some data, some kind of news in order to head higher. And most people are paying attention to that Fed rate decision. And a lot of people are thinking there is going to be an extreme pivot. So we need to pay attention to it. But you can see Amazon's one of the tightest of all the stocks that we've looked at so far. It is diverging from the SPY at this point as well. But that doesn't mean that we can't see an upward move to the top side here, maybe testing this level again or testing this high. So to the bullish side, you want to pay attention to that. And then to the bearish side, I'd really be paying attention to my weekly expected moves. But I really think we're going to see a breakdown this week and head to lower levels, maybe even down to that 134.50 pretty quick in Amazon. Amazon is another example of that negative and positive territory, that negative trend versus the positive trend, and why we need to pay attention to this MACD, especially after a short squeeze. We can see once we do dip into negative territory, we see lows and we see lower lows, but then we head back into positive territory and then we see a low, a higher low, and maybe another higher low. And this area up here has been very, very important for Amazon. So if you do break through, it could be a pretty strong move. But if that then fades and isn't able to hold up in this area and we start to fade down throughout the week, that's going to be a big deal, and it might mean that we're actually reversing to the downside with another divergence on the daily between this high. Now, Tesla didn't necessarily test the bottom or top of its weekly expected move. It actually had a big one last week. So we really want to pay attention this week as these are getting tighter and tighter. All the Bollinger Bands on most of these stocks are getting tighter, which just tells us this week there's probably going to be something dropped that is going to really shake up this market. And right now, that is most likely going to be that Fed rate decision. So we have to pay attention to the CPI because that could give us a reaction up, but then we really have to pay attention to that Fed rate decision because that's going to be the thing that either gives you that big leg higher or actually tears you down. Now, if you are paying attention to Tesla, I'd really pay attention to this level here throughout the week. If you're able to close the end of the week above this level, that means pretty good things, and you're still in that, you're going to be in that positive territory. Okay, so what we want to pay attention to here is actually if we break below this level as well and hold below that level, you're most likely going to see a more dramatic drop because these Bollinger Bands are tight. And we could head to that 207.42 pretty quickly. 207.42 area is important because we've tried to use it as support. We actually gapped above it here, right? We've talked about this, how we gap above that area. That means it's pretty important. And then we use it as support to then launch us higher. So what I'm saying here is that we could make one more dip down into this area in order to spring us higher one more time throughout the entire market, but in this example on Tesla. But lately, the Tesla has done the same thing as a lot of stocks, right? It's struggled to remain in the negative territory and really give us that next low to break down. So right now we are consolidating. You can see that price is getting tight. So we have to see what's going to happen throughout the week this week. Maybe people do get excited Monday and Tuesday before that actual Fed rate decision comes out. So we want to pay attention to it. And that's why I'm overall stating, yes, we can jump up to this area. We can come test this high. We can get a retest, but you want to pay attention to the whole week and see if that starts to fade throughout the week and head back down and close back in this area, or even cut down below this area before the end of the week is over. On the hourly, it's the same thing. We just need this MACD to actually remain in that negative territory. Once that happens, you're going to start to see lows start to come in, and we'll see some kind of bigger pullback if the Fed does disappoint the market this week. Now, NVIDIA's been leading this market. It was the first one to cross on its daily MACD, right? It was the first one to cross. It kind of hinted at us. It was the first one to start a really good negative trend in the market. And maybe it's hinting that there is more damage. So we're going to pay attention to this week, the weekly range, and see if we're able to come up and create some kind of lower high and then head to lower levels with some kind of A, B, C pattern. And overall, what we were paying attention to in this area was some kind of cup around this area and then a handle forming. And it looks like that's holding as of right now, but we could get pretty bullish on Monday and Tuesday, so we have to pay attention to both sides of the coin before we get that second leg down. We really need that bad news to come in order to get that second leg down. But if this actually curls back up into positive territory, we actually could see the opposite thing happen, and we take out this high and start to head to higher levels with an overall bigger ABC pattern to the upside. On NVIDIA, I wanted to talk about the hourly because you can see that negative trend, okay? You see how much deeper we were able to get into negative territory, and you really see those lower lows start to come into play. And you'll notice once we actually do make that big move up to positive territory, you start to see higher lows, okay? So we get those higher lows, and we look like we were consolidating at the end of the day, catching up to those moving averages. Maybe we have a little bit more consolidation to do, and then we start to head to higher levels with some good news, possibly with the CPI. So when I pay attention to NVIDIA, all I do is I look for that hourly MACD to really get into a deep level for that negative trend to continue. And that's overall what I'm going to pay attention to over the next few days. Okay, yields. We saw that big move in yields here, the 10-year yield that we got in front of us. We can see that big move, and the market actually had a green day. So both the Qs and the SPY were green, which normally when you do see a rapid move up as of 2% in these yields, you'll actually get some kind of sell-off. So I believe what could be happening at this point is people think that we are going to extremely pivot early on. Even I've said that we are most likely going to pivot early on in the first quarter of next year. The problem with that is they are thinking we are going to extremely pivot, that the soft landing is here, everything's over, and that everything is going to be rainbow and sunshine. But the problem is we're actually most likely going to get the same narrative they've been telling us, which is higher for longer, which means these rates will have to react. And we can see that they look like they have bottomed out at this point, and maybe they're actually going to head higher after the CPI is reported and once we do get that Fed rate decision. And so we do get that Fed rate decision at 1 p.m. Well, I'm Midwest, okay, so 1 p.m. my time, but we can see that we're expecting that 5.5, and we might stay at that range, but this is where it's important, the economic projections. We need to see what they're projecting, how much they're actually pricing in for rate cuts at this point, because we have priced in a lot more rate cuts than I think what is coming this week. I think we're maybe going to get 50 basis points. And I believe that we're actually maybe 3 times that priced into the market with how up we've gone. So we really need to pay attention to the actual projections and not necessarily the actual Fed rate decision for this month. Now with these rates, I mean, they could come up to this point here. They could come all the way up into here, which was a big point we were paying attention to. They could come all the way back up to 4.8. Right? That line that we were really paying attention to back in the day, they could come all the way back up to that level with a big move. The only thing I would say about that is what we can pay attention to. We can pay attention to this MACD, and if we do see that pop and get into positive territory, look for that to roll back over into negative territory. Now, this might take more time, right? It might actually, doodle around and kind of slowly go up until the end of the month or even going on into January. So I really just want to pay attention to this MACD and see when it is rolling over back to the negative territory to continue this downward trend. TLT, I do give you the ranges on Patreon for TLT, and we actually came outside of that range and then we closed back below it. Okay, so that's how those ranges can be a little bit powerful. It just shows you what's priced in and you know when to take some money off of the table using those ranges. It's a great tool to use for that profit taking. Now we were paying attention, and this is a good lesson because we do have that wedge, right? This is a bearish wedge, and it could play out to the downside, but this time it actually exploded upward, and now we're seeing it start to fade down. So this is what we want to pay attention to for this week. Are we going to see TLT actually head to lower levels and come down into areas, maybe fill some gaps, but we could come all the way back down into this area. I'm more so to the extremely downside. I'm more so paying attention to this 87.50, 87.88 level. And that's really where I'm paying attention to it, but I wouldn't be surprised for us to head to lower levels with a big move in those yields going up and TLT dropping. It's very important to remember we are still in that positive territory, and this could just be another dip down to go find some buyers in this area, and we start to head higher with that CPI data. So because we do get good CPI data, that could trick us once again to thinking, hey, these yields might actually come down even more, and that means that TLT will creep up. But at this point, we can see how TLT, even on the hourly here, you can see how in the last day there, we actually got that divergence between the SPY. The SPY is now trickling up like this, and TLT in that last day dropped. So we want to pay attention to that divergence, and that's very important. And so you have yields that look like they may have bottomed, and you have the dollar, which is coiling up here. The dollar is coiling up really, really tight and looking for that explosive move. So we have to see if this is going to be some kind of ABC pattern to the upside. I have this point of about 105.65 marked off on my chart, but we can really just see on the hourly how we're just remaining in that positive territory. So we did see one dip down into negative territory recently with this kind of sell-off in the dollar. And we can see how when we get down in that area and we get back into positive territory, we come and test this high. So if we're able to see some consolidation or something like that on Monday, the dollar could creep higher, or it could just be some kind of big flag in this area in order to extend higher in the near future. So you just want to pay attention if that hourly MACD is remaining in positive territory or if it's starting to break down. And I know I've said it on every chart, but you can see the Bollinger Bands on volatility are very tight, and we were paying attention to this level of 12.12. I kept saying last week I really would like this 12.12 area to get tested before we actually see a spike in volatility, and that's just because if we pull it over a little bit and look where this 12.12 area got tested a bunch, we can see these volatility spikes, okay? So once we do get in that area, we don't stay there very long, right? We stayed here for like a week or two, and then we see it explode. We stayed here for a week or two, and then we see it explode, and then we see it explode. We just see volatility come back into this market whenever we get towards this area. So if we are able to really test that 12.12 area, then I would think that an explosion might be coming in volatility very, very soon. So the main thing with volatility we want to pay attention to, yes, that 12.12 level and the fact that these Bollinger Bands are tight, so we could see a big move coming. So we can't take all scenarios off the table. We need to pay attention to all of them. If this is going to be a more dramatic sell-off, maybe that crash that people are talking about, then you will see this 50 get above the 200 and remain above the 200, and price will get there as well. So you need price to hold above, right? And then you also need this 50 to hold above the 200. And it's good to remind ourselves of that before a big event like that Fed rate decision and the economic projections. So I believe the main takeaway for this video is we're seeing a lot of people talking about pivoting very dramatically, and I think that the Fed is going to come out and keep their higher for longer standard, and that is actually going to really shake up this market. So even though we might get some bullishness with the CPI, we actually can see all those Bollinger Bands getting tight, and it looks like volatility is going to come back into this market this week. Thank you guys so much for watching. I really appreciate it. Please donate to the channel. I really appreciate it if you already have, and I hope you have a great night and all the luck in the world trading this week. All right.